presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 29th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. How about we have an extraordinary one? And, of course, the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Of course, today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, we've got you covered. Let those fingers do the walking. Send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 77 points. Trade at 24,604. S&P is off 3. NASDAQ down 53 points. That's the leader to the Dow. I take that back. The semis are the leader to the downside, off 1 3/10%. They're trading off 16 points at 1237. You've got the spot volatility index up 18 pennies, 1%, no big deal there. Goldilocks up about $5, silver 6 pennies. Light sweet crude is up $1.30. Lead the charge to the upside. Transdigm Group up $24, nearly 7%. J&J Snack Foods up $18 or 13%. Whoosh. L3 Technologies up 7% or $13. Woodward Inc. up 13. Amazon is the leader dollar-wise to the downside, off about 2.5% or $38. Allergan is off $11-12. That's down 7.5%. Arista Networks up 8. Square down 10%. So certainly we do have things to take a look at out here. Of course, I want to look at what you want to look at. And the first, what you want to look at, this came in last night, earlier this morning, I can't recall when, but it did come in, and it was from JT in New York, and JT in New York wanted us to take a look at the Vanguard Energy Index Fund. I don't know what is actually inside here, but that's okay. And what JT, I believe, was looking for is some type of buy point. So as we take a look at this, and here are our 3 different time frames that we can look at. Left-hand side is the daily chart. Dead center field is weekly, and off to the right is the monthly time frame. The daily chart is of interest, perhaps, to JT, because what we can see here, just simply from a trend line standpoint, price is up against a couple of descending trend lines out here. So even though price is just trading slightly above the top of its profile, by the way, the daily profile, 84.58, we're trading at 84.65 right now. You can see it's running into resistance. Will this pull back, JT? I don't know. If it does, where is support? Well, one of the first places I would look for support would be the bottom of that profile at 81.88. So that would be the first place that I would look. Is there a second place that I would look? Well, the second place might be the first place, which would be Stevie's red line. That's at 82.85. That's also really right around the center of that daily profile level. So strong support inside of ticker symbol VDE should be between 81.88, 82.85. Anything underneath that, and you're going to be able to pick this up for maybe about $74 and change out there. At least that is what the daily time frame chart is telling us. The weekly time frame chart is saying, you know, that's a real possibility. What do you mean? a real possibility. What I mean, Jelly Bean, is that price is trading below the top of its weekly profile, which was tested 2 weeks ago and then last week and rejected. So that says, okay, price could pull back. The monthly chart basically doesn't provide us with anything out here, or does it? Something to think about. Well, let's say that in the case of the Vanguard Energy Index Fund, it takes out the resistance on the daily time frame, those descending trend lines out there, and price trades over the top of the weekly profile. Not trades over, but closes over as it did a couple of weeks ago, 85.57. Well, then there's something to it. If we take a look at the monthly time frame chart, not the one that's in front of you at the moment, but the one we're going to put up here, what we can see is that price has been moving lower, doing less relative energy, creating that Rhodes momentum indicator signal, at least as we speak right now for the month of January. Why do I say right now? Because what we can see is that it is a bullish reversal signal. The old piercing candle out there. Now look, on a scale of 1 to 5, with 5 being the strongest, this is probably about a 2. Doesn't matter. It's still a bullish reversal signal. And this would say that price could bounce up to about the 92.20 level. That's your upside potential. Don't get in on the trade until you see resistance taken out. And instead wait for price to pull back to support, preferably on some lighter volume as it does that. What's that lighter volume? Excellent question. I don't know. Actually, we do, right? Because if we go back and take a look at the daily time frame charts out here, you'll see you had some pretty big volume off of the bottom. When I say big volume, I'm referring to about, in this instance, this equity, about 1.5 million shares. So preferably it's pulling back with less than 500,000 shares as it tests the level of support, which is either Stevie's red line or the bottom of that TAS profile. So JT, I hope that that helps you out. The second question, coming in from Tom G. I think we mentioned Tom G yesterday. Tom writes in, I'm long the Junior Nugget, JNUG, from last week at $9. Let's go ahead and put the JNUG up on our screens out here. This way we can go ahead and help Tom. If we're helping Tom, we're probably helping you too. And the question is, I was wondering your thoughts about if I should sell it and take the cash, or maybe just put a trailing stop just over 10 and see what happens over the next couple of days. Also wondering your opinion on going long the SPY and SPXL here. That fits in right nicely with Jimmy D in the den, who wants to take a look at the ES mini chart and wants our current thoughts on direction. He says, seems to be churning. Is that churning and burning, or is that just churning? Hey, one thing at a time out here. So that one thing at a time is taking a look at the Junior Nugget. What is it that we can see out here? Well, heck, if we look at the monthly time frame chart out here, that's the bottom panel. You'll see this is basically doing diddly. Not too much out here. Not too much. But we're not going to look at the monthly time frame chart for Tom. Tom is a shorter term trader out here. And right now, price is trading into potential resistance. The high from January 3rd. Let's go take a look at it out here before we go to break. That high had 14 million shares. That high was tested with 11 million shares back on January 9th. And right now, it's pushing higher with volume. It's 114. It's 11.6 million shares out here. But ideally, this will close above that high. The high on the 9th was 1041. The high on the 3rd was 1043. You'd like to see it close above 1043 in the Junior Nugget. Why? Because it could be setting up an A to B equals CD to the upside. But we'll be right back because we've got more. Something else for Tom to consider. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we're taking a look at the Junior Nugget ETF for Tom G out there. And Tom, there is more, something to consider out here. And really it's going to be about today's close at 1:18 in the afternoon with price pushing higher into that swing point. I don't see any reason to necessarily take your profits off the table. Of course, now I entered the word necessarily. But here's what you want to take a look at. Here's the bullish side. Well, one, we already know the swing point at 1043. It's got the volume behind the move, should be able to take it out. If it does, then you certainly want to go ahead and put a stop. I'd say, you said 10. I'd say Stevie's green line is 956, so it would be somewhere around 956, not 10, but use a tighter stop if you want. Just know what the average true range of the junior miners is. That might be helpful. But, hey, let's get to the point. The point is, I referred to the day of January 10th out here. I believe I did. And what we can see is that as the Junior Nugget was making its bottom, which was back here on the trading day of January 19th, it created that Tom DeMark setup 9 count, which, by the way, is a extraordinary tool. It's easy for you to learn how to use it. I teach people exactly how to do that. It's available on a workshop, a webinar that's on my newsletter subscription. And since you can try the newsletter for free, and when I say free, I mean free, like F-R-E-E, the cost is the time to sign up for it. You put in a credit card, but your credit card's not charged until day 15. Cancel on day 14. Doesn't matter to me out there, but then you can learn this tool. Was this tool useful to Tom G? Well, it was, because that bottom form with that Tom DeMark setup 9 count. But the other piece of it is that it also set up a trend line resistance level. And that's where price is trading into right now. That's at that 1041 level. That's at that trading day from January 10th out there. Now, if price can close above that TG out there, I'm just going to give you a nickname now, TG out there, then you're going to say, hey, thank God it closed above that, because closing above resistance is a beautiful thing. And that would indicate a change in trend. Whereas if price closes below it, the sphincter muscle will get a bit tighter. Now, we know that because volume is testing that level, price should at least be back up there one more time. So you've got some great cool levels and things to watch for. At 1:20 in the afternoon, I'm not sure. I don't see a reason to get rid of it, but you want to see these levels of resistance taken out. You want to take out that wall. So, Tom, TG, thanks for writing in. I hope that helps you out. You had asked about the general markets as well, just as Jimmy D did in the Tiger's Den. So let's try and go over and take a look at that. Let's take a look at what we think is the most interesting chart today. Not the most interesting man, but the most interesting chart. Now, we would take a look at a couple of different things out here, such as here we've got the ES Mini, the NQ, the YM, and the Russell 2000. I know I talk this a little bit fast, but that way you're paying attention, you know what I mean? And but the really most, what do you think is the most important chart? When you take a look at these four, what's the chart that is giving you and I the most information? You're absolutely right. It is the NQ. That is an. I'm glad that you said that. Now, many of you that didn't say the NQ are probably asking the reason, well, why? Why is that such an interesting chart? Now, earlier this morning, and I do mean earlier this morning, what the NQ was doing on its hourly time frame was setting up a beautiful Gartley sell pattern out here. It was also using that Tom DeMark setup 9 count. Now, we just switched from a daily time frame chart in the Junior Nugget to a 60-minute chart. And you mean to tell me that that tool works on all time frames and all instruments? Well, voila, there you go. It identified the high, and then you saw that good old bearish reversal signal, a bearish engulfing, an evening star. It wasn't just one, it was two reversal candles in one out there. And then price moved lower. Now, as price was moving lower, the question is, why did it stop where it stopped? In fact, I ask you that question. Why did it stop where it stopped? Now, here's the 30-minute chart out there. And, of course, we've got to you move away from a 60-minute chart. Let me restate that. This is a 60-minute chart out there. Oftentimes we have to look at multiple time frames to understand what's going on. Now, we have our market profiles out here, so that's one element for you and I to take a look at. And what price was doing, and when I refer to price, I'm referring to price, it was testing the top of its weekly profile. Now, we already took a look at that yesterday out there, and you're saying, hey, I listened to your show yesterday, Steve-O, and you kind of used the same line out there. Isn't there something else you can give to me? And because you asked, the answer is yes. But 66.29 is an important level of support for the NQ because it's atop that profile. You close back below that, you're looking at 65.52, and below that, you're coming back all the way to the lows of 2018. It's just that simple. It cannot be that simple, but it is just that simple. Now, if we go take a look at the daily chart for the NQ, the reason why this is the most interesting chart out here and why you and I are going to be paying attention to it is because what price did this morning, and the reason that it stopped where it stopped was because it was testing Stevie's red line. Not to the T, but right to the T out there. It was testing a key level of support. And what happens if price closes below that? You know, it might be easier if I show you now. There's the, by the way, there is the daily Gartley sell pattern, which is in place right now. And what price has done, it's been churning and burning. Somebody said churning. I think that was Jimmy D inside the Tigers Den. We can see it's churning. This is the NQ. I know he asked about the ES, but we're taking a look at the NQ because this is the most important chart for us to pay attention to today, tonight, tomorrow morning out here. Because price has been really running in between resistance. That's that little green dashed line out there. That was formed by that Tommy DeMark setup 9 count. You want to learn that. Remember, subscription is free. It takes you about, I don't know, 60 seconds or so to sign up for it, get access to this workshop, see some cool information contained inside the daily, the end-of-day reports inside the newsletter, maybe teach you something else out there that will help you to make money. That's what this is all about. That's what signing up is all about. But if we take a look at prices trading between support and resistance. Now, what's really important about this support level of Stevie's red line is the following. We're going to go ahead and put this chart up on our screen because what we know is that the price oscillator, the difference between two exponential moving averages, in this case here 19 and 39, what we know is that that is up near the zero level. And if price closes below Stevie's red line today or tomorrow or the next day out there, what the NQ is going to have is falling price oscillator below zero. And there's nothing more bearish than a falling price oscillator below zero. And if, in fact, the NQ gives up support, which is 65.52, and so, Tom, you're asking, should you go long the S&P 500 or the SPXL? But when you see this on the NQ, look, the back is up against the wall. It's very possible price has found support, has not taken out resistance. So I don't know. I think this is kind of a heads or tails, 50-50, 55-45, something like that. Not really the ideal trade setup up here. Not really the ideal reward risk. Look, we do know that support held. That's exactly what took place this morning. When price is moving lower, ran right into Stevie's red line out there. Price closes below that, and below 65.52, it's curtains. I mean, the curtains will open up. We'll go back. We'll test the lows of December in 2018. So I don't know. Do you want to go ahead and take a long trade right now? We'll be right back. The universe provides us with opportunities all the time, and I was no different. In 2006, I invested $2,500 in a two-day master trader course taught by Tom O'Brien, then ranked as the #1 market timer for gold. The fact is, if you want to be the best, you must learn from the best. Hi, I'm Steve Rhodes, author of Mastering Probability and the Market Timer of the Year for 2018. To celebrate this accomplishment, TFNN.com is offering you a free 2-week subscription to my award-winning newsletter service, and there's no charge to you until day 15 unless you cancel sooner. That's right, we're waiving the normal upfront deposit, and this offer is available to anyone and everyone, even if you've tried Mastering Probability before. Sign up now, and I'll teach you the tool that identified the bottom in the Dow on January 26th, the morning that led to the largest daily point gain in history. This offer will expire on February 10th, so go to the homepage of TFNN.com now and click on Mastering Probability.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So what are you saying, Steve-O? Oh, what I was saying to Tom and to Jimmy D in the Tiger's Den with regard to my thoughts on direction, I don't think the reward risk is in place right now for you to go ahead and take that long trade. If you're a short-term trader, you need to be really short-term trader at this stage here. Now, granted, there are no levels of support that have failed, so that says that price could move higher. which is sort of the message that we're getting from the Dow Equity Futures contract, which right now is trading above resistance, the top of its profile, or I'll call it resistance level number 1, which is 24,535. But really, what it needs to do is it needs to close above the high from January 25th. And that high is 24,830 out there. Still, the reward risk is not in place out here. If you take a look at the Russell 2000, it's also trading above the top of its profile. So the markets are not really set up to suggest to you and I that they're headed lower. But we've just really been moving sideways, and we've been moving sideways since at least, we'll call it January the 18th out here. So nearly for 10, 11 calendar days, only about 2, 4, 6, 7 trading sessions out here. And it's really the same way. You got the ES Mini, the NQ below the tops of their profiles. There are Gartley sell patterns in place and confirmed for all of these. Not all patterns work. Some of them fail. At this stage here, it hasn't failed either. So support is held, resistance is held. It's why we're kind of in this narrow trading range. Which way is it going to break? I don't know. I know that we can use, you and I can use a cool set of tools and indicators that will assist us when we have some more information out there. It's pretty cool to understand why price stopped where it did today. If you were a short-term trader, you would have wanted to know where Stevie's red line was on the NQ on a daily basis. Subscribers knew that this morning when they got the newsletter because it's included in there each and every morning. In fact, it's usually included there in the evening updates as well, which is the end-of-day reports. Take a look at each of the indices, all the sectors in the S&P 500, and many other things out there. So, Jimmy, I hope that helps you with regard to the ES question, even though we didn't really focus much on the ES. And the same for you, Tom, with regard to your question about going long the SPY or the SPXL. HD out here wants to go take a look at BKCC. Look at it go long a little lower, around 575 to 6 buckaroonies out here. So let's go check into that, see what we can see. Now, that's BlackRock Capital Investment out here. And what HD's got 575 to 6 bucks. Well, 575 will get you down to the bottom of the current daily profile out there, which really 579. You're trading at 607 right now. The weekly top of its box, and this is a bearish structured profile. What we mean by that, well, it's easier if I go ahead and turn price off. I know you're going to say to yourself, what do you mean you're going to turn price? If you turn price off, how will I know what's going on with the chart? Well, what we can see out here, we turn price off, is very clear. You can see that the top of the box, weekly, is at 608. The center, which is not at the center because it's much closer to the top of the box, at 588 versus the bottom, which is down at 516. Now, I use the term box, but you look at the screen and you say, I don't see a box. You got to use imaginary lines to call it a box. Yeah, of course, you look at today's bottom, top, and center, and look at it. That's no box, Steve-O. Looks more like a rectangle if I go ahead and put sides in there. Well, you know what I mean. Well, I hope you know what I mean. What I mean is that when that center line is closer to the top, as it is right now, it's bearish in structure. Why? Because at the center line is where you have both buyers and sellers, and at the top, you just simply have sellers. So we've got sellers lined up between 588 and 608. Are they right? I don't know. But if they are right, it says that you can go ahead and drop or move price down to 516. How will we know? Because they will clearly drive price below 588. Let's turn price back on BKCC. It's just hoovering around the top of that profile out there. So no real indication that it's going to move itself down to 516. That's the weekly profile out here. Needs to break through, bust through 588. So you're looking for a lower entry point. What we know on the weekly time frame, you're up against resistance. What we know about the daily time frame, you're up against resistance. Where's that lower point going to come in? I know somebody's out there asking the question, well, isn't it going to move back to your red line, which happens to be green out here, which means what? It means our price oscillator is above zero. Price is sitting on it right now. In other words, price is testing support. So I think you just do what you're going to do, knowing that today is very likely going to be day 6 of that Tom DeMark setup 9 count out there. Is that 9 count important? Well, here's another chart. Here's a daily time frame. If we take a look at the low that was formed back here on December 25th, it was utilizing that tool and system. So yes, it's pertinent out here. I would just be patient. If price pulls back to the 579 area, not right to the penny out there, then yeah, I'd say go ahead, take a long, as long as you're pulling back with light volume. And by light volume, I'm referring to less than 700,000 shares out there. So HD, thanks for writing in. I hope that answers your question with regard to BlackRock Capital investment out there. Now, no other questions I see in the den. No other questions that I see by email. So let's go party. Let's use the last 20 minutes. It's after all, we should do some pre-gaming for the Super Bowl, which is going to be this Sunday, right? And I guess Purdue Farms is probably kicking themselves in the head because I think, pretty sure, chicken wings are kind of a big thing that, or I guess in their case, nuggets are a big thing, you know, for Super Bowl parties. And they just had to recall 16,000 pounds. Now, 16,000 pounds, I don't know what that even means. That's a lot more than you and I can eat out there, but that could just be a smidgen, so to speak. All right, enough of that, because Tucker wants to know if we covered oil. And we did not cover oil out there. Hey, Tucker, what do you think about oil? What do you think the world thinks about oil? What do you think the world thinks about oil since December 26? Just for the heck of it. I'm glad you asked that question. Let's go find out what the world thinks. In fact, oil as an asset class, do you consider oil an asset class? It is the best performing asset in all major currencies out there. Now, I know you're asking that question. Where'd that come from? How do you know that? Well, because what Stevie does like to do is say, hey, we've got to be worldwide traders out there. It's really important to follow the money. You know how everybody on TV, maybe not everybody, most everybody on TV, they're so consumed with talking about what? The R word, right? The rest and relaxation word out there, right? Nah, those aren't the two words they're talking about. They're talking about it as if there is a recession or there is a rising interest rates, recession, they're missing the point. Or businesses aren't going to be producing as many profits as they should. You know all the rigmarole out there. Does it really matter? The M word, does it matter? No. What matters is, where is money going to go? Where does money feel most confident out there? Now, if we go back to December 26, that'd be 23 trading days ago. What we will see in looking at these charts is the best performing asset in rate of change happens to be light sweet crude, up 24% in dollars, up 24% in euros, up 16% in yen, up 21% in pound sterling. It's even outperforming the Dow and the S&P. We'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we're going to go take a look at light sweet crude out here, currently trading out at 53.30. And as we were pointing out just simply before the breakout here, this set of charts, watch list, I don't know how to refer to it because it's really not charts, so let's not refer to it as a chart, but it's data. But it's perhaps the most important data that you and I could understand or want to understand, which is where is the money flowing? For example, if we were to ask the question, we'll get back, Tucker, we'll get to oil. I'll eventually get there. I promise you we'll eventually get there. And you gave me a great segue in there. And but this chart, if you look in the left-hand side, just to go through, because I'm here to assist you. I'm not here to waste your time, that's for sure. But I am here to go ahead and help you cut through the BS before Steve shared this information with you versus what was being shared on the boob tube out there. And over in the left-hand corner, you're taking a look at the Dow Equity Futures contract. You're looking at it priced in dollars. That's the top line. And you can see in the comments section, Dow futures in euros, Dow in yen, Dow in pounds. And the next column, ROC, stands for rate of change. You'll see the number 23 up there. So we're looking at the last 23 trading sessions. Takes us back to see how these instruments have been trading since that January 26 time frame. And you'll see that we're up in all major currencies inside of the Dow. If you take a look at the DAX, money is flowing more into the Dow than it is into the DAX. Compared to the FTSE, money's flowing into the Dow or S&P 500, the ES-mini that's over on your right-hand side out there, versus the Dow, versus the DAX or the FTSE. Look at the Shanghai. You don't see a concentration of cash there. Look at gold. You don't see a concentration of cash in gold either. That doesn't mean gold isn't performing well, but if you go back and take a look at how gold is performing since December 26, it's not going to blow your skirt up. And if you're sitting there holding gold inside of pounds, it's blowing your skirt down, so to speak, because it's down just slightly. You can take a look at treasuries out there, and you can see how treasuries in the other major currencies is flat in dollars. It's off inside of traded in pounds and yen out there. And by the way, you can take a look at the major currencies, the U.S. dollar, the euro, the yen, the pound, the Canadian dollar, that's the loonie, the Chinese yuan out there, and the Australian dollar. And if you look at the percentage moves since the 26th, you're going to see not much. If you look at the Nikkei, you see basically an unequivocal, no great movement. So where's the money being concentrated when it comes to the indices around the globe? You got it. Here in good old US of A. That doesn't mean that we're not going to see a market headed lower. We already took a look at the NQ. You and I know what to look for to tell us whether or not we're going to go back and test those lows in the 26. Looks like that information, at least as of today, may first come from the NQ. That's a beautiful thing out there. But my whole point is, when that test, whatever that test is, and there is going to be the next great buying opportunity, does take hold, we're going to really want to understand what these charts are telling us. Because probably what we're going to find out is what you and I know today at 1:45 in the afternoon. The global flow of capital is going to be coming here. So it doesn't matter about those R words out there or anything else, whether that's interest rates or it's recession or what have you. Money's got to flow somewhere. It's not going back into people's pockets, so to speak, and not into the market. I'm not referring to you, the individual trader, necessarily. I'm referring to the global flow of capital, the big bucks out there. Ain't going to the Hang Seng, ain't going to the Nikkei. Now, emerging markets have seen a nice move out here. Not too shabby. But not as good as the U.S. markets. Light sweet crude, that's seen the biggest move. Hey, the commodity index, the Goldman Sachs commodity index, that is, which is 50% weighted, I believe, in energy out there, has performed pretty well too. So we'll want to go watch those, specifically with regard to light sweet crude. Eventually, thank goodness, Steve, you got there. Here's what we know right now. In order for light sweet crude to continue to move higher, it needs to take out resistance. It's been tested today. It's held. What's that number? 53.74. You close about 53.74, it's headed higher. Where is it headed to? Well, it could easily head up to 65 buckaroonies, 65.43 to be exact. You got to take these things one step at a time out here. If we take a look at the daily time frame chart for light sweet crude, I'm just looking at another chart out here just for the heck of it, but now we're going to go ahead and, why did crude stop where it did? Yeah, let's not go there. Let's just simply stay here, out here, which is taking a look at, and we just looked at, Peter, gold price and all those currencies with that chart that we just looked at. Well, it wasn't a chart. It was data. But we'll still go ahead and take a look at it for you. But here you can see we've really been sideways in light sweet crude, haven't we, for about a couple of weeks out there. So, but what you do see is support holding. And so we'll call support one of two levels, 51.27. That happens to be Stevie's red line. So 51.27 or 51.43. Those are the two levels of support that light sweet crude must hold. Otherwise, there's going to be some type of retracement that is in play. Now, if we take a look at light sweet crude, it's sort of trading the way that the U.S. stock market is. We're not going to get too enthralled into the old correlation that one is controlling the other. We're just not going to go there. But the charts do look similar. I didn't say eerily similar. I just said they look similar. So in conclusion, Tucker, this is covering oil. It's moving higher in all the currencies out there. You kind of get my drift there? That's real positive with regard to what is money chasing out there. So light sweet crude should have really good support at 51.43. Got resistance 53.74, but now you know the big picture. For Peter, if we go take a look at gold price and all those currencies, remember we just did that, sorta. When we looked over here on the left-hand side, we can see that there's been about a 3% move since the 26 of gold price in dollars. In euros, it's 3%. In yen, it's less than 1%. And in pounds, it's negative out here. So you can see that the enthusiasm for gold is not coming from traders around the globe out there. It's just not. They're enthused about the commodity index. They're enthused about the Dow or the ES Mini or the S&P 500. They're enthused about light sweet crude. And they're kind of so-so with regard to gold. Now, maybe that's going to influence TG, Tom, out there with regard to his trade, although he's in the junior nugget, and that thing was looking pretty smart. But we do know levels of resistance that need to be taken out in order for it to look even better out there. With regard to gold, because we're all visual, sometimes looking at data isn't so visual, we can come take a look at this chart here, this visual set of charts. Now, the cool thing about this is saying, hey, right here and right now, we're seeing gold move higher in dollars. We're seeing gold move higher in euros. We're seeing it move higher in yen. Hey, we're actually even seeing it move higher inside of Great British pounds. But we're at like new highs, taking out old highs inside of the other three currencies out there. And that looks pretty good, doesn't it? It does. Maybe. Because there's always more. There's always something, well, not always, but sometimes there's something else that we've got to consider. Now, I know that everybody is massively bullish gold. But should they be? Something to think about. And what that something is go take a look at this chart out here. We know how gold forms bottoms. It does it with the Rhodes Momentum Indicator signal. We also know how it forms highs. It does it with the Rhodes Momentum Indicator signal. It's not confirmed yet, but it's present. Clear and present danger. Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Dow's up 92, S&P flat. The NDX 100 off 47 points. Let's finish out the show by taking a look at IYR. This one is for tomorrow in Seattle. And the question is, says, hi, Steve. I'm looking to short IYR. It's approaching resistance, but I'm not sure the best level to go off of for resistance out here. So if we take a look at the IYR, which is what's up on my screen, I'm just trying to, do I have that on my other tools out here? And I know I've only got 2 minutes to go, but I want to really do a good, thorough look at this. So here, first, what tomorrow is taking a look at is perhaps taking a look at the daily, the weekly, and the monthly time frame charts out here. And when tomorrow says that price is up or resistance, we look at the daily, we can see that trend line resistance. You can draw this on your charts too. That's maybe about the 82.70 type mark out there. So that's a level. If you look at the weekly profiles out here, you can see that 82.99 is resistance. By the way, we're at 81.86. So tomorrow we're going to say not so fast, not just yet. If we look at the monthly time frame, And we have a couple days left in the month out here. Trading-wise, the top of the box is 82.07. We're at 81.86, so pretty close out there. If we look at the daily time frame, now the IYR, by the way, I think is the best performing ETF within the S&P 500 since the December 26th low out there. Don't quote me on that, but I think just visually looking at the chart out here, I think it's one of the top performing sectors. That's the real estate sector inside of the S&P 500. But you can go figure that out for yourself. Here's what the IYR is doing tomorrow. And what you want to do is pay attention to the trading day of December 13th. That high creates that Tommy DeMark set up 9-count trend line. Just as the bottom was called with that tool, now price is at resistance. If price closes over the December 13th high, whether it's today or tomorrow, out there, it's almost saying, don't short me because I'm the strongest, because I'm King Kong. That's what I see when I take a look at IYR. So I hope that helps you out. Folks, thanks so much for being here. Stay tuned. Your favorite polar bear, my favorite polar bear, David White, is up next. I'll be back with you on Wonderful Wednesday. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.